use a 920. I use a 920 for quite a while. And, you know, when the market was coming down so bad, uh, you know, everything was falling below the 34. So 34 was out of the question. And then a year ago, November, at the end of November, I saw everything was starting to turn around. And then, especially from March 1st or March 9th, I started to see the 34. Prices were moving above the 34 again. So the 34s seemed more feasible for me. And that's why I started using that again. Here's a little junker, but move up. See, I'm not too concerned about how much the stock is. I'm more concerned about the price action and the pattern that the stock is putting in. So actually, I drew this in back here when I drew this here. So you can see the nice cup and a very nice handle. And now it's putting in this little base. And see, we got 1, 2, 3, 4 wicks down. Double D's, dojis right here. This is going to move up. Uh, you know, first move above the EMA 8 right here. That's the blue line. There's a difference between playing a $70 stock and a $7 stock. How many people can afford to buy 1,000 shares of a $70 stock? And a lot of people can afford to buy 1,000 shares of a $7 stock. The other aspect is you can leverage a $70 stock with an option. That's another way to go. So, you know, there's more than one way to skin a cat. It's easier for a $7 stock to double than it is for a $70 stock to double. That's simple. A lot of the China stocks are my favorites because last year China and metals, gold, were the big movers. This year, everyone's saying the same thing: China, gold, and metal, will be the stock plays of the year. Okay, I've completed those. I have two here that we're going to look at, uh, but we're going to draw them. There's nothing on the chart. I forgot what the symbol was. Okay, first thing, this doesn't have a lot of data on it. I'm not fond of charts that don't have a lot of data. I don't know what happened right here. They could have had a reverse split, name change, something. But I do like this double bottom down here. See, that's 788, 790, plus the tweezer right there. So based on that, right here, it tells me, Tony, you better look down at the daily, and that'll give you a better picture of what this weekly's doing. Okay, this is here's the 790. Here's the 788. So now what we're going to do is we're going to annotate this. To me, this is looking very handsome right here. And I'll explain as soon as this loads up. Well, I don't think that's going to load for some reason. This isn't working properly, and I don't want to take up your time. Okay, so what I would do right here is I would take my trend line, I draw it from here over to here. That's showing the double bottom right there. And then this move up, and we kind of get like a bear cup here, and we come back down, and then we start forming this climbing support right here. This is a hammer, doji, uh, bearish engulfing, and another hammer right here. Well, the way I look at it, we get the hammer, we get the bearish engulfing, that's trying to scare us a little bit right there. And then we get the doji, that's a reversal candle. And now we get another hammer, or you could call this a doji too, a dragonfly doji, which is bullish on the bottom. And notice each tip on the last 3 days a little higher. So I would draw a trend line across there like that. Actually, right here. That would take it above the 8. And then I could draw another trend line going up right here. So making a little flat top triangle there. This should move up this week. These candles are pretty clean. Actually, they're pretty clean going all the way up to $10. And then the last chart here I'm going to do is this one. Oh my goodness, this I thought this one wasn't all drawn up already, but anyway, let's see here. So we have this downtrend here. We get down here, and it starts making all these W's right here. See, there's a little cup and handle right there. Makes a smaller one right here, W. This comes across. It breaks above that, goes above the next resistance, above the 346. Now we have the indecision candle right here, the doji. Now understand, a lot of people get out when they see a doji like this sitting next to a uptrending candle. I have to see confirmation that that's going to go down for me, because too many times in the past I would get out on a doji like that, and then the thing just shot straight up, the next day. So a lot of the candles, I look for confirmation on them. A lot of the patterns, confirmation. This pattern right here, if you draw this trend line straight across, this is a little half W. This is nice confirmation right here. When this price comes up to here and then it falls back down to here, which is only about halfway down the move down to here, that tells us that this is very, very strong, and it doesn't want to go down any lower. People are done selling, and we're just waiting for the buyers to come in. That's it. And then it moves up to that trend line and breaks through that. And this should get up to this $5 level again. Okay, so number one, there's 4 phases or 4 things to look for. One, you want to see a marriage of price and volume, support and resistance. Number 2, you can use a trend line. Trend lines are the simplest way to trade. They're so old-fashioned, and the reason more people don't use them, They're too damn simple. People do not, especially traders, don't like simple things. They like to complicate things for themselves. And that's why they have a difficult time trading, and eventually they make too many trades that they don't like. They get discouraged and they get out of trading. So, folks, keep it as simple as you can. Uh, I'm a firm believer of that. And other than that, education. Educate yourself all you can, because once you get into trading, this is an education game. Charts are education. I mean, I look at thousands and thousands of charts. That's my education. I study them. I do very well on the trades that I make. I can stay in a trade longer. I can give a chart more wiggle room because I've learned how to do this. And how I've learned how to do this is by what the monthly chart and the weekly are dictating to me. The daily chart is the fickle time frame. So if you have, you get most of your up and downs on that daily chart. So if you buy a position and it starts to move up and it's coming to a resistance level and you're not sure whether to hold that or not, you want to look at your weekly. The weekly will tell you, if it's in trend, you just stay in that position. It's not going to draw down very much. And then it starts up again. And the other thing is watch that moving average, that EMA 8. As soon as people see a red candle, they're ready to get out. Well, I don't agree with that. You stay in the stock as long as it's trending. And when you have 3 trends, you have the EMA 8 trending on the daily, the weekly, and the monthly. Like my friend Lakota Eagle says, you're riding the 8 train, man, and that's a good place to be because you're going to get a lot more out of the move. But anyway, guys, I thank you for having me and listen to my gibberish, and I hope I just said one thing that you might think about, And Frank, thanks a lot for having me give this little webinar.
Tony, thank you very much. As you can see, guys, a lot of similarities in some of the stuff that we look at and a few different things, right? But what I like about Tony and why I got along with him so well in the past is we keep things very simple. We see things the same way. We don't like to confuse it with too much information. You can find that that's also a really good way to learn. But thanks, Tony, for for doing this for us today and for coming out to talk to us. I'm sure a lot of people that download this session will get some great information out of it. What I was going to talk to Tony about, guys, in the future is to possibly work on some swings that we can share with the group as well, because I like his longer-term view on things. And sometimes when you're day trading, you do miss out on some of these longer-term